Hello everybody, welcome back. Let's do a quick video. There's not much more to say that I didn't say yesterday and pretty much the day before. So if you're looking at Ethereum, reacting on the 4-hourly death cross, moving back down, currently below moving averages like the 20 and the 21. So probably see a little attempted bounce soon, which would either be from the 50 simple or 50 exponential on the bottom of the Bollinger Band. So just around the 2,673 zone. We'll have a quick look at the daily to see if there's any other reason we should be expecting a bounce from the daily. But if the 4-hourly looks like this, I wouldn't be too convinced that we'll see a great deal of movement up, but we'll see. Yeah, I mean, to be honest, there is a chance around the 2,630, which is your daily Bollinger Band, which has been reclaimed. No sort of loss of momentum over here, so there is a chance that actually we do push up on this one before we move back further down. The boldest, biggest move on this, I would expect to see up to 3,000. That's a lot to ask for Ethereum, given the state of the chart. Fresh death crosses across the board, really, reacting on a 4-hourly. And what's bad or good, should we say, for Ethereum or whatever Ethereum does, usually you'll see some of that positive or negative behavior move over to other altcoins. But if you check the market this morning, you will see a sea of red, which shouldn't be at all surprising. That's generally my expectation still, as the consolidation is still in full effect. We've not broken out, we've not broken down. We're still very much, within a formation, but I'm not convinced at the moment. I'm not convinced that we're ready to power through. So let's have a look at Bitcoin to see what's going on there. Bitcoin, again, is the opposite of not XRP, Ethereum, where we have golden crosses that have confirmed, and we're now getting a golden cross on simple moving averages. And the support, just as it used to be for exponentials, is now at 61,500. So this is where we were looking for a move down to yesterday. Didn't mean that it had to happen yesterday, but trickle down to those levels. And if you're going to get a bounce, it's going to be around these areas. 61,500. There are opportunities for markets to bounce based on Bitcoin, but not on Ethereum. But yeah, I suppose on Bitcoin. So a little bit further down before we might find a low. If that ends up being a higher low, especially for Bitcoin, then things would look okay moving forward into the rest of the week. If we lose this area, just like we said yesterday, continuation down and well, I suppose just got to see how low it can go. 52,000 is probably a good area to attempt along, but anything lower than that, wrecked city, I'm afraid. And the same as I was saying these last few days, there is a chance that we bounce a little bit lower, 59,600 is a possibility. So that's basically all there really is to say. There's nothing new about what I've been saying there. So let's have a think about the S&P. So the US 500 is currently opened. The last few candles, really, these last few daily candle bodies, trying to move up. And if you see, I mean, it's hard to see on this laptop, I appreciate that. But we are sort of trying to move up on the 7 simple moving average, which is usually quite bullish. That's usually the last stage of a rally, though. We caught some bounce here, here, and at the moment we're trying to bounce on it again today. We might see a move back up to the top of the range, maybe even see a wick new all-time high, 5,660. I think it's an appropriate thing to try and short that, to be honest with you. Even if it was to short it down to the centre of the Bollinger Band, 5,450 thereabouts, I still think that this is getting ready for a larger move down. That's not a problem. Trading direction neutral, you can make money out of both sides. If you're new to trading or you're not confident in trading, I wouldn't bother trying to use derivatives or shorting a market. Futures, derivatives, CFDs, leverage, all that sort of stuff is for people who, I'd say, know what they're doing, but are more confident in what they're doing. So you can make money out of both directions. But if you're learning all of this, I wouldn't bother trying to use shorts or anything. Just stay on the sidelines and see what happens. But personally, I think a short position is probably more appropriate than anything around here, with a view to start moving its way back down to making a new lower low, really. The 200 exponential was the V-shaped recovery, as we expected it was. It's not made the new all-time high, but it's been close to it. But I don't think it's got enough power to continue on. We can see already there's a giant overheated money flow index read on the daily here. No divergence, but what that normally suggests is whether you treat it as overheated or in what some people like to say, it's overbought, man. It's overbought. Needs to cool down before it goes any higher. And if we do continue to go higher over the next couple of weeks, with a read like that, you're going to get bearish divergence on a money flow index from a high level. So it will have to come down at some point, and probably similar to how we've already seen it come down, to be honest with you. Not much more other than that to say about the US 500 or the S&P on the daily. So it's showing warning signs at this exact level, and obviously higher than this will be warning signs. Bearish divergence, you can see this on the 4-hourly. The golden cross hasn't been retested. The golden cross is down to similar first target really, 5,495. That's where we'd see a pullback down to, and again a decent reaction is probably expected from there. You can't say we're going to be completely breaking down with 4-hourly charts that look like this. 4-hourly charts are saying, I want to try higher, I want to form an uptrend, but there's divergence on this time frame as well as the overheated read on the daily. To me, that says a pullback has to happen, whether you consider that to be a bullish retest or the start of making a new lower low. On the daily, a pullback is most likely required. It's the more likely outcome of anything that we see right now. So the Dixie is the next chart we'll look at. But the stock market, being the S&P, saying we are high, and if you want to go higher, we'll have to test lower. And if we break lower than those moving averages, we will go lower still, and maybe even form a persistent downtrend for maybe what could be a couple of weeks, couple of months. Finally, we'll just end on the Dixie because obviously the Dixie has been looking pretty bearish. One single drive, bullish divergence, still below most moving averages. It's a clear downtrend still, but a minuscule but reasonable bounce forming. The 4-hourly is not really giving too much away, really, other than a single drive of bullish divergence. I wouldn't get too bullish on that setup, really. It's a clear bearish formation there. The bullish divergence on the daily here it failed. We continue to go down still below all moving averages, quite significantly bearish there, to be honest with you. The death cross retest is all the way up here at 104. That invites a retest. So despite being bearish, a larger move can happen, and that's my preference, to be honest with you. This is why I think we shouldn't be too bullish on markets as of this very moment in time, because the Dixie on the daily has got a death cross that would like to be retested. Take a couple of weeks, could take a couple of months, but a death cross to be retested. And if we look on the weekly, it's the same old, same old. The 200 simple moving average on the weekly, getting a retest, or if you're going to get a decent bounce from anywhere, that's where it would be. The 20 moving average and a lot of other main moving averages, but the 20 being the highest, is up here at 104.3, so similar to the daily death cross. So I will be looking for a bounce into that area, really, not by the end of the day, not by the end of tomorrow. But that's the general destination for it, I would say. And if you break down lower than that, then yeah, all markets will pump as a result. They're just generally where I would expect to see them move the opposite of that. And the next area you'll be looking for a major bounce, and it would be a major one. It would be down here around 98, which is the bottom of this channel, the channel that's been going on for about 12, 13 years. And it's been very neat and tidy. Every time we've hit the bottom, and every time we've hit the top, we've had a very good reaction, and it's helped us navigate bull markets and bear markets. There is a delay on all of this, by the way. The bull market um, for Bitcoin certainly did not begin up here, but it was close, wasn't it? It was close, and the bear market didn't begin down here, but it was close. It was close. So let's have a little think about that as we approach the significant low. If we break down below the 200 simple moving average, we have to factor that in. We have to recognise what it is that we see. Nobody knows the exact outcome of any chart, but we do have moving averages, setups, formations, divergences, help us guide and navigate through the price action. So again, there is no one particular call that I've got to rule them all, but it does look like a little trickle further down for Bitcoin, crypto, and stocks. And if we get supported on the supports, which is again what you should expect, excellent, move back up. If you lose those supports, which obviously we could, then we continue back down. So currently, for the rest of the day, I would be looking for a little bit further down across the board for everybody. And then we'll have to monitor the situation when we approach the support. If they end up being like, a knife through hot knife through butter, like altcoin supports were months ago, then we can safely assume that actually we're going to go down further, and this uptrend or this bull market or this portion of the bull market is not ready to resume bullish momentum. It has to come down further before we can expect any further uptrend and higher highs. But look, I'm not a bear, not a bull. I'm just telling you how it is. This is it. I wasn't particularly fooled about what happened on Friday and through the weekend. Not saying that it you have to be fooled, but the market responded to Powell talking with no decisions or anything like that. So it is, not very convincing that the uptrend can have legs, given how it was. These green candles were born. It's kind of nonsense, really. It's just words. So I was saying it for Friday, Saturday, Sunday, Monday. I'm saying it again today. It was just words. It's nothing more than words. So, to expect the market to sustain the prices that they found themselves at because of that situation, I think it's quite unlikely. But if it does happen, it'll happen after I move back down into those supports, and then you can pick it up. But anyway, long story short, downtrend or further downside most likely going to happen today, and if we get those supports, then that could lead into a nice big bounce tomorrow, and see if we go to new highs. It's trading setups. It's not calls. It's trading setups. Anyway, I'll leave it with you there. Good luck with all of that. Take it easy.